Guys, a weekly market outlook. Today is Sunday, 5th of October. The US shutdown, will it really last longer? The last time we remember Donald Trump was president, it lasted like a stunning 5 weeks. Currently, markets face some sort of an impact. The momentum, the positivity in the equity sector is starting to fade somewhat. We, at least based on their technical patterns, see some technical resistance, which we want to examine. But what it means for the crypto space, which has really rocked the show again, starting this early trading days in October, is the big story. Plus, furthermore, what we're gonna expect in the next trading days. By the way, guys, early next week I will release another video. The one and only silver guru David Morgan. I interviewed him, currently editing the video, and to then release it for you guys to see what he has to talk and what his insights are in regards to the silver market as usual. Outlook today, Sunday, 5th of October. We got, as said, the shutdown in the United States, which is currently harming market sentiment, slightly at least. But as the story unfolds, we might see there's going to be kind of another maybe delay in data. The news report here, forexfactory.com, my personal page when it comes to news events and in the economic calendar. Tentative is what is not only happening in Japan. Governor Ueda, anyways, in Japan, do not claim the direct timings here. But what it means for US markets is more the critical story here, because US unemployment claims, due to basically the shutdown of the government, the workforce has been kind of pushed back to their homes. Basically, most of the non-critical agencies basically kind of do not perform their duties, which means that last week's unemployment data, or say rather last week's non-farm payrolls report, has been delayed until further notice. But what we got last week from the US, Joel's job openings were somewhat positive, slightly at least, yet a huge disaster happened in the ADP, automated data processing, non-farm employment change. They caused a shed of 32,000 jobs, basically not a growth in economic sentiment, but instead the market had really been negative, as we've seen in July earlier. And the negative sentiment might be ongoing. This data is not really useful much for the Federal Reserve yet. If we get the data maybe incoming this week, they might be. And this is basically the NFP data. The hourly earnings are really expected to remain in a sideways pattern. And personally, I don't expect the data to come out this current week. I expect another delay as the shutdown currently kind of continues. But what we also see is the unemployment claims, which are potentially coming out on Thursday. If they are going to offer another rise, this might be somehow interesting. And this might be something which is what the Federal Reserve could use in regards to their interest rates decision moving forward. If we are looking at the market, and that's the S&P 500, we see a rise in the demand. Basically, the upside momentum is expected to look somehow positive. Yet, what I'm worried about is a bit this technical pattern here, this resistance zone, nice trend line, could drive market motivation negative. If we see maybe that the next couple of trading days here in basically this coming week will remain negative, we could see as well that some downside momentum in these candlestick patterns, a bit of exaggerated move potentially, but might continue, as now the market's momentum with this pin bar candlestick could indicate indeed, as said, a slide in prices. Some claim the September data had been positive, and the move in September was mainly positive just due to what we've gotten from the Federal Reserve. Another rate cut in the US happening earlier pushed the market to higher levels due to the extra liquidity added. But if this is going to if this is going to continue, might remain the question. And if we are focusing and looking at the longer term charts, we observe that the data so far has shown us that the S&P 500 continuously moving higher. The Nasdaq continuously also moving higher, and the upside potential is obviously kind of not going in a straight line, and a correction would just be helpful in markets and would potentially cause the market sentiment to remain rather negative and potentially causing the downside or a correction to basically help market motivation medium term. So whether we see another lift in markets higher, weaker data from the unemployment figure, weaker non-farm payrolls might both call for some sort of strength in markets as the Federal Reserve is expected to cut rates. If they cut rates, the US dollar would lose some momentum. That supports also demand for the outside US perspective. But fresh liquidity usually finds its way first to the equity sector and hence obviously helping market motivation to remain positive. The market momentum is also kind of quite interesting in regards to the British pound. Looking at the market here, we see that the pound US dollar currency pair remains still within the uptrend. So it would be positive. Yet we see that this sideways price zone here, and in particular the doji candlestick. Now you might say, Frank, whenever you say doji, it means focus on the previous candle. Exactly. And that would be positive, right? Correction lower, the market moving higher. Doji candlestick would mean focus on this candle and the market is projected to move potentially higher. However, what we see is, and that's the different observation here, we have this mother candle, which is extremely bearish, this red color looking candlestick, and any break of the low point might indicate prices are expected to weaken. And I'm following up with this because we've had this in the past, and I would say that based on the trend line perspective, we would rather see prices to weaken. Based on that, actually, I believe the US dollar strength to continue. I expect as well that maybe the current shutdown situation might actually also help the greenback to gear up steam, because one thing we haven't seen, in particular since Trump took office, that the US dollar, the greenback usually adds also or helps as a safe haven currency. Whenever the news and the incoming data has been negative, the safe haven, the US dollar gearing up some steam. So sometimes in positive data helps the dollar to strengthen, sometimes negative data also helps the greenback to strengthen, and that's exactly why I expect here that the market momentum is just maybe rather causing the British pound against the US dollar to basically move lower. Looking at the dollar index, we can also see something similar here, and that the market remains in a bit of a sideways pattern. And that brings me to the other market here. The dollar index resembles basically kind of nicely the dollar against the Swiss franc. Any break of the low, any break of the support area, which is this one here, would certainly indicate falling prices. Any push to the upside, though, would also help moving this market towards higher levels, as the bottom, the support zone, looks kind of quite nicely happening here. The weekly chart supported. The zone is kind of quite positively indicating upside motivation. Fast forward, if we switch and just check out how the charts look like, the dollar against the Swiss franc looks kind of quite similarly, right? So we have the same market here. We have the dollar Swissy moving higher. We have the dollar Swiss franc moving higher as well. So both markets kind of look the same, and I'm still within my trade here, the dollar Swiss, which we share in our community. The trade looks kind of quite cool. A break of this level, free insights guys here, a break of this level might indicate that the market is going to move to higher levels, causing basically the US dollar to gear up some steam, potentially causing maybe another uplift in the greenback. The important, or one of the important news events, no matter US shutdown or not, is going to come from New Zealand. And that's just actually helping market motivation to unleash further potential in that regard. On Wednesday, the 8th of October, we got the interest rate decision. It is expected that the Bank of New Zealand, RBNZ, is going to cut rates down to 2.75%. So 25 basis points rate cut might help basically the US dollar to gear up steam. Remember, the currency's rate cut usually weakens a currency. Now, this is going to be expected. So that's not a piece of news which had not come out, well, yet, but since it's expected, it's already priced in by traders beforehand. However, the New Zealand dollar is currently just weakening already, and that's just the expectation we see here. Looking at the long-term trend, we observe the market's weakness here. We have a shorter term, a longer term, whatever trend lines we have as well. The monthly charting pattern here, the 50 moving average cutting market motivation, and any break of the low might just indicate some sort of a downside motivation. I would just say though, this zone here, the 0.55 whatever zone, is a nice target. And what I like in this monthly chart, again, quite long term, we are in the early days of October so far. Early in October, the market starts to appreciate slightly, but during the later days, we might see that the market basically weakens, causing or calling for a potential bearish looking candlestick pattern, which currently looks not overly bad. But this candle, which is just now looking slightly bullish, might indeed start to change the outlook, maybe just to form a sort of bearish looking candlestick like this. And if the blue box will weaken here, we might quickly see that this market ends like, or this candlestick in October looks like something like this. So early of the days of October higher, the latter days lower, something which we see here in this market. Earlier on in September, the market went all the way to the upside, where we were thinking, wait a minute, is the market really looking to be bearish? But again, that's a trader's mindset, guys. Remember, before the trade, we just write down how we expect the market to do, to look, to whatever over the period of time, and we don't deviate from our candlestick patterns based on other time frames. This trade is based on the monthly chart. If earlier in the month of October the market moves higher, we just stay put. We remain on the sidelines. The same here. I said, look, if the market in September is going to break the high point here, we might cut the we might cut the trade short, but it didn't. So the market then later in during the late days in September, the market moved to the downside, and now our trade is just in positive territory again, and hence we just expect the markets to unfold. Currently, by the way, our stop loss is at entry, and the trade can't lose any momentum anymore. For further insights, check out our website fxstrategies.asia to get access to our trading group as well. Just let me know if you have any questions also under this video. Anyways, the market's weakness might continue. The rate cut, if it happens in New Zealand, would cause the New Zealand dollar potentially to weaken slightly. But since the market is already in the bearish trend, the market might extrapolate losses, cutting downside momentum further. And that's exactly how we see this current trend. Basically, on the weekly chart, we have the same story currently unfolding, right? So we are trading back below this 50 moving average, the blue trend line, which is just currently falling. We have exceeded the low points here, which are now acting as a support zone. So these zones now, in particular here, this area is quite interesting, might now act at further weakness, and maybe the market will start to appreciate slightly earlier this week on Monday, Tuesday. But any break of the lows here, which are indicating also the high points here, any break of the low might actually just cause the weakness to unfold. And there we go. We have now the general outlook here in this market. Monthly chart, we see the market's trend bearish. We are below the 50 moving average. Weekly chart, the market is bearish, retracing higher. It gives us another opportunity maybe to sell the market again at a slightly higher level. Potential stop loss maybe just up here if the trade is concerned as a long-term trade. And based on the daily chart, we see the same story here. We have the support, turning resistance, and the market's weakness might again continue to unfold as well. So there we go. In this market here, in the monthly chart, daily chart, weekly chart, we see that the New Zealand dollar is expected potentially to cause some sort of downside motivation even further, looking to be extremely positive as the trend unfolds, with maybe a rate cut in New Zealand, obviously helping the market sentiment to basically continue with weaker momentum. If the Royal Bank of New Zealand will not cut rates, obviously this would vice versa remain positive. The market might just start to appreciate somehow further towards higher levels as we speak. Last one up, apart from maybe precious metals and the oil market, is the crypto space. Cryptos, extremely positive. Kind of we closed our positions, most of them at least, as I felt as well. Will we see that weakness is going to unfold? September in the equity sector has been positive, as we said. Positively, though, was it not ending in the crypto space. Cryptos, Bitcoin, Ethereum, all tokens went lower. We kept our Ethereum position. In fact, we added slight momentum or slight trading volume to that trade. XRP, Solana look also not overly bad. Bitcoin, though, is gearing up the momentum. A new all-time high being created in Bitcoin looks extremely promising, and all the worries so far have been washed away. Why? Because the market's push to the upside here might now indicate another momentum to higher levels. We see it here. The sideways trend line, boom, breakout here, market pushing higher. Sideways trend line, boom, market pushing higher. Same story here, market now maybe on track pushing higher, and we are now soonish towards the 130,000, I might say 140,000 US dollar level would be in reach. And anytime the market is just a break away from the high points, we usually saw upside momentum to unfold. Upside here, upside here, upside here. Now, the volume and the momentum shows the market is riding higher, yet slightly smaller, right? So we might say, hey, is the market now moving towards 150, 200, 300,000 US dollars? Hell no, of course not, right? But we see that from the initial rise, and that's here something, where was it, 27,000 up towards 70,000, 70,000 up towards 100,000, 100,000 up towards 125. So I think 130, 140, maybe 150,000 would be the sky's limit if I would be asked. But guys, leave your comment under the video. Let me know what you think. Maybe you have different opportunities. You see different ideas. I still see we have a huge, big market. We have tons of ETF which support the upside. And currently, it looks actually that Bitcoin is the leading fourth in the general markets trend, leading upside momentum also for other altcoins in general. Ethereum looking positive, by the way. We stated this several times. The 3,800, 4,000 US dollar level should not break. It wasn't. The market went higher. September caused a bit of a correction, but the correction didn't extend all the way to the downside. Instead, the market closed up here, and that's now the indication why I am bullish and I focus on Ethereum currently only because any break of the high point here is currently just the potential indication that the market's rocking show will continue. And for Ethereum, I see the chances that the $7,000, $8,000 range might kind of be tested. Why? Because it's a smaller token. It shows that due to the ETF that the inflow is still sustainable and strongly happening. Apart from the Bitcoin upside, I see more chances that Ethereum will move higher. Hence, obviously, my focus on this token. XRP, and by the way, it would be another superb chance here for XRP, which I see. We had the triangle formation, another explosion to higher levels. We couldn't see it back then. In fact, I wasn't on this train back then here. But what we see is after these triangle formations, the upside usually help the momentum. And XRP is no exception here, right? So we see that the move from 215, say, basically here, or 220 level towards the 360 level. Now it's up to you. Maybe the 5, 6, 7 US dollar, say $5 to $6 level, if the upside will continue, might be on the cards. So just don't quote me on this, but $5 is exactly what I see. If you can read the figure or not, it doesn't matter. But the upside in XRP looks positive. Plus, we've seen it tons of times in the past. We don't often need any fundamental data for this market to continue moving higher. Solana, on the other hand, last but not least, in regards to the crypto space, looks still positive, but also lags potentially behind. The market or this token remains capped maybe within this range here. The strong pin bar candlestick and the upside early now in October tells me I would be utterly careful, because we might see that within this candlestick range, the market might also fade if this price here doesn't close all the way the 250 US dollar level. We might see that a break of the low points here is just indicative of causing some sort of further weakness. So stay focused on the other tokens, I might say, and just keep this in mind. It's not a it's not a doji, it's more like a pin bar candlestick at an important zone, and this zone is currently telling me that the market's weakness might kind of tell me a downside motivation will continue. Guys, that's the markets in regards to the most important ones. Now, last but not least, precious metals and the oil market. Gold prices obviously rising higher. The uncertainty in the US in particular with the shutdown is going to unfold. Dollar strength, dollar weakness, let's say we don't see much in the dollar at the moment. I expect dollar strength to continue at some point at least. However, now we see that the net beneficiary is definitely the gold market, and it really went up above the 3,200, and we can see such a strong rise, right? So look at the volatility here. 3,290 all the way towards the 3,900 or roughly 4,000 US dollar level. So upside has kind of increased the motivation here in the gold markets to potentially extend the higher prices. Yet what I see is such a strong uptrend, and that's a parabolic uptrend, which worries me slightly. I would be careful. My own only trade apart from physical gold is still in WPM, Wheaton Precious Metals, the dealing house, that is still looking good. I already cut some of the trade as the market grew substantially, but I remain in the majority of the position. If the market corrects, I would enter a new position, a new kind of a line in my Wheaton trade here. Would add some fraction into the portfolio again, but I want to have some correction in the market at first. Speaking silver, the same story also unfolds. Again, my interview with David Morgan will come out early next week. So please just don't forget to subscribe to our channel to not miss any updates here. The 50 US dollar level, it could be what I see as a strong resistance, but take my word not for granted. Just check out what David Morgan had to answer me in the interview. Yet the market's upside looks sustainable for now, at least. Remember, I remain in my little short position. I believe the market's correction is just about a bit of a stone throw away. And what we can see, if economic data weakens further, if the economic demand also weakens, we could see that extrapolated losses in silver are potentially projected. Why? The uptrend is so sharp that actually the correction usually follows up later on, and that's exactly how I see the silver markets to potentially unfold as a downside momentum might continue. Yet the trend is our friend, and the trend is strongly up and running. The oil market is doing what we expected it to do. By the way, our short position works out nicely. We saw a strange and direct push to lower prices after the initial push higher earlier in the week. Upside momentum. Now the break of the support zone tells us basically that downside momentum might help the market. And any guys, by the way, any positive sentiment in regards to the Hamas Israeli-US situation, in particular around the Gaza conflict, right? So if there's any sort of truth at least, or any peaceful situation achievable, this would help the oil markets to weaken further. So stay focused on this one here. By the way, prices on the pump have not really gone much lower in Germany. But anyways, that's a different story here. and none we have to discuss in our outlook here this day today. Anyways, oil prices look set to weaken, and with that, I like to release you guys. Again, we have another interesting week. We see potentially chances in the New Zealand dollar to weaken against the US dollar. The dollar against the Swiss franc looks quite positive. The precious metals market looks set to rise higher. What is the US index market doing? Will the S&P 500 as well as the Nasdaq continue with their move higher? I see chances for a bit of a correction as we examined. And on that, I would like to release you. Have a great week trading. Wish you all the best so far. Talk soon. Have a good one. Bye.